Okay, let's talk about a company you probably know. A brand that built a billion-dollar empire on, well, really comfortable wool sneakers. You know the one, Allbirds. They were synonymous with sustainability and that whole Silicon Valley casual look. But what if I told you that company, almost overnight, just threw its entire identity away in one of the most shocking pivots the market has ever seen?
This is what happened to their stock price. In a single day, a 582% explosion. For a company that, let's be honest, we all just associate with shoes. That's the kind of number that just screams market mania. So, yeah, that brings us to the big question for today. How on earth did a footwear company trigger this kind of reaction? I mean, what did they do? Invent a shoe that lets you fly? Nope. The real answer is actually way wilder. That's right. They just promised to become an AI company. They decided to stop making shoes and start doing AI. It is a head-spinning move, for sure. And today, we're going to dig into the evidence and figure out if this is some kind of genius masterstroke or just an act of pure desperation. So to really get this insane pivot, we have to start with why it happened. And the simple reason is that the original Allbirds dream, well, it was turning into a total financial nightmare. Let's take a look at the collapse.
The thing that's so staggering here is just how fast it all fell apart. I mean, think about it. In 2021, Allbirds goes public. They're a Wall Street darling with a valuation over $4 billion. By 2024, that market cap had just cratered by 97%. By early 2026, they're closing all their main U.S. stores. This wasn't a slow decline. This was a catastrophic freefall.
And if you look at the hard numbers, the picture gets even grimmer. Between 2022 and 2025, revenue was nearly cut in half. And at the same time, they were just bleeding cash, losing over $77 million in 2025 alone. With the share price down 99% from the IPO, the message from the market was brutal and crystal clear. The core business was broken.
So, okay, you're backed into a corner, you're facing total collapse. Management didn't just decide to restructure, they basically detonated the old business model entirely. Let's break down exactly how they pulled off this pivot, from shoes to silicon.
Here is the playbook, plain and simple. First, they sold off everything related to the shoe business, the brand, the inventory, all of it, for just $39 million. Then, they got $50 million in new funding. And finally, they announced a new name for the empty corporate shell that was left over, NewBird AI.
So what is NewBird AI even going to do? Well, their new business is something called GPU as a service. The best way to think about it is like this. AI models need a massive amount of computing power to learn and to work, right? And that power comes from these special chips called GPUs. Right now, demand is so insane that there's a global shortage. So NewBird's plan is to just buy these chips and rent them out. It's basically the digital version of selling shovels during a gold rush.
And this right here, this shows you just how total this transformation really is. Allbirds was famous for its B Corp status. Its whole identity was built around sustainability. NewBird AI is literally asking its shareholders to scrap that environmental mission. They are trading eco-friendly wool for energy-hungry silicone. It's a complete 180.
Okay, so that's the plan. It's bold, it's absolutely shocking, and yeah, it sent the stock to the moon. But now we get to the most important part of our investigation. Is any of this actually real? Is this a smart bet on the future, or is it just a mirage?
All right, let's look at both sides here. The bull case, the argument for this, is pretty simple. Demand for AI compute power is just through the roof. The big cloud companies are struggling to keep up, you've got long wait lists. So a smaller player like NewBird could, in theory, serve all the startups and other companies that are getting shut out. But the bear case, wow, it's pretty powerful. Management knows shoes, not servers. Their $50 million is a drop in the ocean compared to the billions that tech giants are spending. And history is just littered with the ghosts of companies that tried these kinds of buzzword pivots.
The expert analysis started rolling in right away, and it was not pretty. One analyst at William Blair was so skeptical, he just stopped covering the stock completely, calling the move a Hail Mary. And if you don't know, that's Wall Street talk for a desperate, last-ditch effort that has a very, very low chance of actually working.
This quote from a branding strategist really just cuts right to the heart of the issue. That incredible stock surge we saw, it wasn't based on any actual business. No revenue, no customers, nothing. It was pure hype, driven by a single press release. It didn't magically fix the company's problems or bring back the billions in value that were already lost.
And here it is.
The biggest red flag of all, summed up perfectly by this Seeking Alpha headline. NewBird AI is trying to enter a war zone. I mean, a market dominated by giants like Amazon, Microsoft, and Google, companies investing billions and billions of dollars. NewBird is showing up to a multi-trillion-dollar gunfight with a $50 million knife. You know, even if you look at the company's fundamentals right before the pivot, the picture is just bleak. This analysis from Guru Focus gives Allbirds a score of 1 out of 10 for profitability and 1 out of 10 for growth. These are the vital signs of a really, really unhealthy business. And this is the foundation that NewBird AI is trying to build on. For anyone who's been watching the markets for a while, this all feels eerily familiar. It's like the dot-com bubble, when struggling companies would just add .com to their name and their stock would pop. More recently, remember the crypto boom in 2017? A beverage company, I'm not kidding, changed its name from Long Island Iced Tea to Long Blockchain Corp, and its stock tripled overnight. That company eventually got delisted. The parallels here are just impossible to ignore. All right, we've seen the collapse, we understand the pivot, and we've weighed the evidence from the experts. Now it's time to put it all together and answer the one question that really matters for any investor. So after everything we've looked at, after peeling back all the layers of hype, what's the rational move here? Should you actually put your hard-earned money into this shoe company turned AI hopeful? Is this a ground floor opportunity, or is it a trap? Our verdict, based strictly on the evidence we have, is unequivocal: sell. The gap between what this company wants to be and what it's actually capable of just seems way too big to bridge. Let's just boil it all down. The core argument to sell is just overwhelming. You have a management team with zero relevant experience entering a hyper-competitive war zone with just a tiny fraction of the money they need to even survive, let alone compete. The only real risk against selling is the hope that this speculative mania just keeps going and defies gravity. But as we all know, hype is not a sustainable business model. You know, when a business is in this much trouble, you start to value it differently. Analysts stop trying to predict future profits, and instead they calculate what's called a liquidation value. Basically, what would be left for shareholders if the company just shut its doors and sold everything off today? For NewBird AI, that number is, well, it's breathtaking. 2 cents, not $2, 2 cents. That is the 12-month target price, based on the lowest analyst estimate of what the company's assets are actually worth. It just reflects the insane level of risk here and the near total lack of fundamental value that analysts are seeing in this AI pivot. And that really leaves us with a final, much broader question. The story of Allbirds and NewBirds AI, it might be less about this one company and more about the market itself. It really makes you wonder, has just slapping the letters A and I on your company name become the most effective and maybe the most dangerous way to create value out of thin air?